My name is Francis from the Democracy in Europe movement, and I would like to know, I agree with the statement of the last speaker that we also need to reform the established banks, and I was wondering whether they're here, or whether we're just praying to the converted, or whether we can actually, you know, try to infiltrate them in a way to speak at their events, get them to these events, and to have more of a dialogue to really bring this transition about. That's my question.
Thank you for the question. So we had Professor van Liedekerke explaining that he has dialogues with these different bigger banks. Maybe we can hear other panelists on this question.
Who are they? You're talking about the board, the owners, the clients, the employees. Be aware that you're not talking about natural persons, you're talking about legal persons. And in these banks that are too big to fail, who is your vis-a-vis? And even if the CEO, as a person, as a natural person, is totally in favor of everything that has been said, he has to obey his owners and the shareholders. And the shareholders are the investment funds and the pension funds and the hedge funds, and they are not interested. And then who is this big corporation? And as I so much agreed on what has been said, and I want to become a cooperativist of NewB, if I can. And there was, and also what you said, Professor, but I so much disagreed on one point that I ask if I can express my disagreement on that point. I deeply disagree that globalization would not be possible with smaller banks. You said the alternative is not to globalize or not to globalize, but the alternative in my view is to globalize with smaller non-financial companies who need smaller banks. But I don't want to have companies of the size neither of Monsanto nor of Bayer. Monsanto is already, although it's 3 times smaller than Bayer, it's already so powerful that although 90% of the citizens in the USA desire a transparent labeling of GMO on the food they buy, there is no labeling. Why? Because the power of Monsanto is bigger than that of 90% of the citizens in the US. So I want smaller companies than Monsanto, and then a smaller company of Monsanto can deal with smaller banks. But my question, because I also have a question to you, if I can back to my slides, if you say that 30 billion, please, yes, if you say that 30 billion as a maximum size is too small, my question is, what's your proposal? Shall there be no limit, or do you just advocate a higher limit? This is, this is the way our conventions work. The conventions work with several proposals. It's totally clear that citizens would vote, yes, there shall be a size limit. But then comes the more interesting question, where shall it be? And maybe if 30 billion is too small, maybe you advocate for 100 billion or for 200 billion, but would you advocate for no limit? And then we are entering in a bit more meaningful discussion.
I think you, in a sense, you misunderstood. My point is that you have to make a choice. It's not just that you limit the size of banks. At the same time, you will limit the size of firms. So it's a choice. So then you limit both. You limit the size of economic systems. Yeah, and I disagree in the sense that I don't know, and nobody knows actually exactly. But suppose you make that transition. I mean, the fact that we had this globalization movement, that they became so large, there is a reason for that, and it had a huge impact. Of course, you create powerful players, yeah? And there is a problem in the sense that we globalized economically, but not politically. And that is the challenge today. So I will not choose. I think it's a choice that you as a room can make, but be aware it's not just talking about banks, it's also talking about firms and about the economy in general. Choose small banks, limit the size of bank, limit the size of firms at the same time. That's what we will get. Now the other thing, if you talk to banks, who do you talk to? It's with small banks and it's with big banks like that. In the end, there is always a group leading these organizations. And so they come and go, yes, but the best you can do is talk directly to these people. Now they have to answer to hedge funds and all the other stuff. You know, I know 2 hedge funds who are specialized in ESG. These things did not exist before. They only focus on impact investment and where they could find the money there. You have now companies like BlackRock. It's not just the banks that have this change process going on. It's also the big investment companies like a BlackRock. BlackRock is in every firm in the world. It's huge. It's 4 or 5 trillion. For the first time, they start speaking out against weapons in the US, against the fact that there's climate problems and so on. For the first time, yeah? I'm not saying that makes a big difference, but there is an opportunity now in the entire system, I would say, definitely in the European part of that system, less in the American, and almost nothing in the Asian part, unfortunately. Yeah? But here we have an opportunity to talk to these people. And why? Because they feel the pressure coming from the public and from different sides. It comes from everywhere. They feel the pressure, and they are aware of it.
Anyone wants to comment on momentum?
Yes, thank you. I'm not quite so optimistic. I think you have 3 sectors, which are pharmacy, agrobusiness, and finance, where you have 3 things. It's complexity, greed, and hugeness, very big. And if you mix the 3, because the question is religion. So if you mix the 3, the fact that you have a very big company, complexity of products, and greed, you have a natural movement which will come back, that you will create complex, dangerous products which are very profitable on a short term, economically but not socially, and which will get out of the hands of their creator or of the hand of top management, which does not understand anymore what people do on lower levels. That's what happened with the financial crisis. I don't know if it happens inside Monsanto, if they know what they're doing with glyphosate. And so, Professor Liedekerke, I agree what you say, that it's getting better, but I think the movement of betterment is so small when you consider the huge power of doing bad things, that I must say I'm not very optimistic.
There are questions in the room. I saw one in the back and one for the lady here. Yes, sir?
Yeah. We hear more and more speak about monetary reform based on the Chicago Plan, sovereign money and so on. I would like to have to know what you think about the Vollgeld initiative in Switzerland, the initiative money plan, who will be voted in June, I think. Yeah.
Well, I will not respond myself, but you actually have an organization in the room called Positive Money Europe. We're very proud that they sit in our offices at Finance Watch. So you have 2 representatives there, so I encourage you to go to them and talk. You probably know them already. Yeah. But yeah, I think it's a key element, in fact, of what led to the crisis. You know, when we come to how the agenda was set, actually, I would even argue that the crisis was more related to monetary policy and you know, very cheap creation of money leading up to 2008 than actually a lack of regulation of the banks. I mean, this is a bit provocative, but actually the macroeconomic side of it was absolutely crucial. So do you want to?
One of the former CEOs of the UBS is in favor of positive money, so it can't be that a bad idea. I'm of course in the supporters committee. I even propose to develop from positive to sovereign money, which would be a further step. And there are so many advantages. I started a short paper of 10 pages and tried to figure out which are the strongest arguments in favor, and still I don't know, because there are so many. One is that public debt could be cut down to half or by 3/4 in countries like Switzerland, Germany, and I guess also Belgium. But maybe, as we heard, that there was almost a global meltdown of the financial markets due to payment services. Almost payment services stopped. That would be one of the 15 advantages of positive money, that the payment system could not break down because it would be separated from the credit and savings system of the banks. It would be separated from the balance sheets of banks, and it would be 100% secure central bank money, which we would use for our paying purposes. And maybe just that would be a strong enough argument in favor of that reform.
Maybe just one comment before we take the question from the lady in front.
Well, the thing is, you always have to be careful who regulates the money stream. So there will be always regulation somewhere. And the question is who does it and what kind of intentions. So you have Chinese banks are not free market banks. They are in the hands of the governments. Yeah, but what type of government? How do they use it? If you look at the DRC, Congo, so the debt of Congo was equal to the fortune of Mr. Mobutu. Yeah. So I mean that's the problem. And it's all very well to say we have to be, you have to refer to the common good, but look at the elections in Italy now. That's the problem in democracies. If you live in pluralistic societies, so where is the common good? You might be surprised about what your neighbor considers to be common good. Yeah? So it's a big discussion. It's not easy. It's not easy. So I think the positive money and so on, it's a nice idea, but one of the effects will be that your capital markets will become so much smaller. Again, you will not be able to support the large economic structures we have now, so be aware of it. Be aware of it.
Yes?
I have a dilemma, which brings the topic back to our lives. The dilemma is, first of all, what I often see is that the systemic analysis is not coinciding with personal behavior. So we have criticized and we have moralized and we have been activists, but then when I see personal financial choices, I see them repeating the default settings all the time and therefore making the same mistakes and the same systemic, producing themselves as a person, the systemic wrongdoings. And my question, my dilemma to you is, do we first change the system and have systemic change to provide a framework for very economic illiterate people, and there are lots of them, to function in? Or actually, do we have to wait for the democratic, to the level of everybody being educated in money and finance and in economics in part one, to be able to actually then evolve through personal change towards systemic change? So systemic change for persons or personal change for systemics?
Yes, Christian.
Always has to be both. It's not an either-or question. Maybe the sequence is only if there is a certain market or practice or role models, only then you can get the critical mass for regulation. But I don't know a single example where a voluntary, intrinsically motivated ethical practice became mainstream without the support of laws. And the good message of the so-called cognitive dissonance you're talking about, people behave differently from how they think or talk, they don't walk, they talk, has a good message, Because if they could decide as political citizens on the regulations and the laws, they would vote for regulations and laws that incentivize them as economic citizens to behave in a more ethical way, to become ethical investors, to become ethical consumers, and that's why the combination of both is essential.
Yes.
Professor?
Oh, yeah.
No, I agree with previous speaker, but I would like to say, so people always tell me, well, people are not consistent. My students, yeah, they are younger generation, still they want their own car. They want to work for a company that gives them a company car. Yeah. So nothing changes in that respect. No, but if you ask my students, do we need to look at the quality of the air? Will you vote for cleaner air? They have no doubt whatsoever. So they're shooting in their own foot, but that's how people are. So if people, I'm sure if I ask the question here, who speeds on the highway, I'm sure that the majority, let's say almost 90% will speed on the highway. We have data on that. Everybody does it. Then I ask my students, will we eliminate this law since we all break it? Nobody wants to eliminate it. It's crazy. I mean, that's the reason why you have to pay, yeah? But we don't eliminate it. So there are two ways you have to look at persons. You are indeed a citizen and you are a consumer. And we are not consistent. But what we do see is that it moves in terms of the citizen, we see movement. If you now look at financial companies, they have discovered the fact that people might like SRI, so responsible investment, and they see that it's money for them. Incredible. People are now seeing that, well, maybe if it's the same risk return, why not invest it ethically? They are flowing. I mean, they are like the new money that comes in, like 30–40% of the big banks in private investing goes to an ethical investment now. It's totally new for them. It's totally new. So I mean, these things are actually changing. Are they changing fast enough? I don't know. I would say not at all. Yeah, but do not think that there is no potential for change. Even in the entire system, there is potential for change.
Did you have something you wanted to add?
1 cent, but the quintessence of the question, if you ask the citizens, would you support that ethical banks are legally supported and treated better than unethical banks, you would gain a broad majority. And then ethical banks would enter markets and become more in number and competitive.
One last, and then we go back to questions from the public.
Yes, to amplify this, you have to give us a choice. If there's no NewB of similar bank, of no Triodos in a country, you have to put the first one, the second one, and then you create a market, and there will be people for this kind of bank, and so you change something.
Any other questions? Yes, the lady in the middle. Indeed, we saw, we as Financité, we follow the socially responsible investment market, and indeed between 2015 and 2016 we saw a big jump. So there is momentum, at least we see it this way.
Hello, I want to ask, like nowadays investment is a big part of banking life, and these loans were given for investments. How can we guarantee that they are like greens or ethics? Need we regulation, perhaps in the European Union?
Thank you for the question. I think many of us can answer this. Maybe you would like to say something about it?
So the question is, how do you define an investment or a credit that is green? Was that your question?
Yeah, it's exactly like we can speak about green loans. It's like 1% of the loans are green, but of this 1%, not every loan is green. How would be that guarantee?
Yeah. So I think 1% is even too much. So the only substantial market in greenness is green bonds, and currently banks can label green their own bonds themselves, right? So you would guess that 90% of them are not really green.
Exactly.
But so the main point to understand here is that we have completely abandoned any say on the allocation. So we talked about stability, we talked about the amount of capital they hold, and the stability of the financial system. What we haven't talked about is purpose, because purpose has been excluded because it's the efficient market hypothesis. So markets will distribute the money efficiently, but quite crucially, it means so now we have a big discussion, if you follow a bit the news in Europe, about sustainable finance and green finance, and how will we finance the COP21 and the Sustainable Development goals. And then, of course, it's always the same situation. You go, okay, governments are broke, and of course we accept that as a given. We don't question the fact that governments are broke. And then everyone turns to the private financial sector. And then people turn to them saying, okay, so the money is there and it needs to flow there. and then people start to get on their knees and literally pray, saying, well, please, Mr. Big Banker or Big Investor, would you please move some money there? But the reality is that there is no pressure point at all. I mean, there are pressure points in regulation about how much money they need to hold in case they go bankrupt, so stability. But there has been nothing, as I said, in terms of the G20 agenda, nothing, not even the start of a discussion about how the money is allocated, so to which sector, in which way, how do you measure that? That's the discussion is only beginning now. So that's I think that is a big issue.
Banks, by law, have to do risk assessment of the loans that consider to finance. That's the Basel III criteria. That's not a voluntary exercise. That's legally binding. It's compliance. But all they have to check is the financial risk, and they do not have to check the ethical risk, from human rights to climate stability. And one leverage could be that the future generations of Basel regulation switch from the financial risk check to the, they call it non-financial risk check, but it's ethical and non-ethical risk check, actually the other way around. And the analogy is already occurring. The analogy between a company's financial balance sheet. There are not 25 options to do a corporate or a company's financial balance sheet. There is one unified methodology which is legally binding in all member states of the European Union, which is externally audited by financial auditors and which has legal consequences, from liability over tax consequences, and Austrian courts shut down a company which does not comply with its duty to give this financial information. What we are now working on is that the non-financial information, which sometimes is called GRI, a Global Compact, ISO 26000, B corporations or common good balance sheet, is becoming a full analogy to the financial balance sheet, meaning we unify them into one legally binding, externally audit common good balance sheet with legal consequences, means differentiated tax rates, tariff rates, priority in public procurement, or differentiated loan conditions. And the very same we do with investments and with loans. Banks are obliged by law to do the ethical risk assessment of every loan that is applied by a business or by a private person. And only if this, today we can struggle about how can we define a common good. And you're right, it's a difficult, extremely difficult, but in the end, we will have a definition. The same way that in the end, we have laws that treat on liberty, that treat on social justice and social security, on democracy and on peace, because we in the end, we found a definition. What is peace? What is human dignity? What are human rights? What is liberty and what is democracy? And in the same way, we will find a kind of definition of the common good in the ethical creditworthiness assessment, and we will apply it. And if parliaments are not ready to impose this second risk assessment to banks, then maybe citizens will.
Yes.
Well, just following up, I think when the question was asked, I think ethics is extremely fragile. If you say, I have an ethical investment and I'm an ethical person, well, we've seen it with Oxfam. If you're a company, if you're an organization that does good things in the world, and they do good things in the world, let that be clear. But if then something happens, which happens in all organizations probably, it has an extreme influence on the perception. So you have to be careful when you say this is an ethical investment or this is a green investment. And you have to be even more careful with this kind of stuff than with the non-green, let's say, or the non-ethical investments. So I am very much in favor that you have a broad discussion on what will be a minimal norm for ethical investments. What will be a minimum norm for green investment? And I'm very much in favor that the financial regulator starts looking at this. Now, again, all these things are happening. We are in Belgium discussing about a minimal norm that is not just procedure, but that has content. We are seeing that the FSMA, the financial regulator, is looking at this. Now, why is the financial regulator looking at this? Because you have so many people now going into SRI. So the financial regulator needs to look at the clients and needs to look that they don't get sold rubbish. So they now want to know. And they know nothing about it. So they have to start from scratch, really. It's completely new to them. But again, these things are not coming. Now, when you say the non-financial reporting and so on in companies, again, these things are growing. I've been part of that movement also. And if you look at financial reporting, it started in the 1930s with the financial crisis. That's when it started. It was all voluntary. And the legal framework came only in the 1950s, 60s, and in our places even later. It really took a long time. If I look back when we started discussing about sustainability reports in business, well, that's 20 years ago. Before that, there was nothing. So the change is going faster than people think. Why? Because you and I have certain values, and because our values are changing. Because, for instance, we don't like when animals are mistreated, and we react to that. Now, if I'm an investor, I want to know what this company does. Because otherwise I won't invest. So how do I convince a big bank that there might be something in it? Because we have data showing that a company that takes care of non-financial stuff, of environmental stuff and so on, is less risk for a bank. We have data on that. And so the cost of capital of these firms goes down. So they start measuring it. And if the private sector thinks there is something in it, it can go really fast. But you have to push it, you have to push it.
I see more hands raised. There's one in the back, and then Lieve in the front.
I have a question, because you speak about banks, a lot of banks. I work in a bank. I'm really surprised that to limit for you to give more democracy. It will be the type of project. It could be I heard a lot about product, but myself, a bank is not only a seller of product. And if you don't change this, the bank will not change. The change in the bank is really normally a services give to people who don't know what they are, sometimes what they are doing. They don't even know what risk they will take. And that's, for me, is the most important. And I heard a lot new banks, and after I heard new product and so on. That's not this. And by doing this, you know what? You really decrease and you take power of people, because they don't even know what they are buying. And for myself, the first exercise to do in a bank is mainly to understand what is the project of someone. And you speak about money, but money is only one way to put people who have savings with people who don't have savings by giving credit. But you need to understand that the credit is the people that can't really reimburse, because you will have what we have in the States. And it's the same for people who have money, savings, and who have enterprise, who have product to have investment, and they don't have money. That's the stock exchange. And I'm really surprised that I have not heard this today, because for myself, what I do today, because I'm in asset management, is doing this. And that for myself, I'm really surprised by this.
Any comments from our panelists?
It's true, I did a fault. When I talked about products, I should have said products and services. It's a little bit the same. But I said also, the risk is to sell products to people they do not need, or more products than they need, or products without a social utility.
I completely agree with what you say. A bank is a service firm. You deliver service to people, And so this service relation is a central relation. Now, to come back to the financial crisis and so on, one of the problems that happened is that people could not give an honest service any longer because of the payment structure that some of these products were involved with. That, I think, is scandalous. So if you talk about ethical banking, you should also talk about ethical organizations. It's something that I did not develop here, I did it in other places, but there was a clear problem in the way that these incentive structures were formed inside these organizations. And then you push people to give wrong services. And then you destroy the whole system. So yes, it is also a parallel story about what is in an organization that has integrity. That is really part of it, and that's really a problem for any bank, also for new banks that we build.
Liv, in front. Was there someone before? Yes, sorry, go ahead.
Thank you for your question, actually. One of my questions was, so the conference is entitled...
the future.
No. no, social banking works.
Ethical banking
Ethical
works.
banking works. I would like to know how many bankers or traditional bankers actually there's in this room, because I don't have the impression there are so many. Okay, cool. I find that amazing that such a topic don't bring more bankers out there. I'm working for a platform that is raising funds for social companies with really high impact, which is called Liedekerke. And we have the same views that you're sharing here tonight. Quite difficult to work in this institutional framework, and in the same time a momentum, but also the necessity to convince a lot of people that are not convinced yet by this systemic change that we need to build. And I was wondering how associations like yours, organizations like yours, are working together in order to foster this momentum and to carry it way further than in this group of convinced people than we are here today, for example.
Thank you. Maybe we can hear Liv's question before we have comments on this. The microphone's coming, it's behind. Voilà.
Thank you. It was more a reaction to what you said, Professor van Liedekerke, is I agree, I work for a Triodos Bank, so I'm aware of some of these discussions going on and following them from close. And it's true, there are changes going on, but at the same time, and that is what I want to bring in, let us not be let us not underestimate the flexibility of the existing system, because what is happening as well is that, of course, the traditional banks see what is happening, see that sustainability has a higher quote now. So what have traditional systems shown a lot of times in the past is that when revolution is starting in the margin, what you do is you take how is that called? That medicine, you take a light portion, a homeopathic portion, so you can use the vocabulary, so you can use the whole context that you can refer to, but in the internal, the real system, you don't change. So let's not be blind for that type of, you have names for that, but at the same, it's not only, there is a variety, so there is change. You cannot, everything that is going on, you cannot simply say it's greenwashing. No, there's more going on, but let us not stop at the homeopathic portion, and that's the danger, because so many people, instances, are happy with what is going on, but it's still the homeopathic portion.
On the depth of ethics?
Yes, I think Liv is right. It's not because Carrefour sells 20% organic food, maybe 25, that Carrefour is a sustainable and ethical company, it's not because KBC, BNP Paribas Fortis, are getting better, that they are, but I only tell my views, that they are sustainable and ethical bank. If you are looking for a sustainable and ethical bank, it's something else. You have to look at governance, and you have to have that everything is right, not just 20%.
Capitalism assimilates everything as soon as it's attractive, sexy, and brings another return on investment. So there was a very a strong renaming and rebranding in Spain, that all the major banks that had failed renamed in now common good banks and ethical banks, and I'm the most sustainable one, I'm most responsible one. And even the German bank is talking about cultural change, and that's less than homeopathic, the truth part in it. On the other hand, the question was to the ethical banks. Looking at history, maybe those who are the best known banks are capitalistic banks, but the majority of all banks always have been ethical and not-for-profit banks. The credit unions, the cooperative banks, and the savings banks. In Germany, the savings banks, by law, are obliged to serve the common good. So these banks always have proven that. And the guy, the Raiffeisen, who I quoted, he was the founder of the Raiffeisen movement. Now it happened that in Austria, Raiffeisen is the most powerful network in Austria. And the central bank is a purely capitalistic institution. But the regional cooperative Raiffeisen banks still remember their roots and their original values. And concluding with Larry Fink from BlackRock, because I read his letter and I wanted to know, what did he really say? And he really said that every company should have a social purpose and should benefit society. So this, you could consider a revolution comparing with the business of business is business from Milton Friedman. But then reading the whole letter, of course, he gives the condition as long as you pay a sustainable and meaningful financial return on investment to us and our clients, yeah. And then you can ask, is this a cultural change? Or is this just the attempt to combine what sounds good and what is business as usual? And that's why it's so important that we have legal definitions. And that's why I stressed so much the Italian law. They defined what is an ethical bank. And then no bank can say, I'm an ethical bank. No, because we applied the legal criteria and you're off, all of you are off. And just the most serious ones, like Triodos, maybe like the GLS bank in Germany, like you and us, only very few will fulfill all criteria. And then we are back to the argument from before. We need role models, and then we need regulations and laws.
And I think, if I may, I think you just alluded to, or maybe indirectly, to public banking. So we made a conscious decision not to mix the discussion between ethical banks as in private banks owned by citizens who do what these citizens and cooperators want to do, and mix it with public banking. But I do think in a financial system that serves society, the role of public banks is absolutely key. Because if democracy functions, then you define a project for society. You could do it for Belgium, and a no-brainer should be we need a zero carbon economy. You need to define that economic project. So how do you get to a zero carbon economy sector by sector? And then you put public banks just to serve that, with, not indirectly and so on, but because that is their mandate. Now you'll tell me it depends who's in government. Of course, that's democracy. So you might not like the government and then what the public bank does, but it is democracy. I would argue that in the pure private bank sector, in most cases you don't get a better deal than you would with, so I think public banking, maybe to feed the discussions at the networking part in a few minutes, is also a key part of a healthy banking system.
Thank you. Do we have time for 2 last questions? I saw one in the middle here.
Yes.
And someone in front, and there's a third one. And I'm sorry, we'll have to conclude.
My question is quite short. I understood the warning from Professor van Liedekerke that organizations might be need to become small as well when banks are becoming small. But then my intuition would say it might be a good thing, because small enterprises tend to be natural persons, not something legal persons. So what are the real dangers when organizations would become smaller?
We need a discussion on what is the optimal size of an economic system. So that would take us very far. But in general, economists believe that if you would reduce the way we interact with goods and so on and services, that would lead to very large loss of welfare in general in the world. This is the reason why we are against Trump, who wants to start trade wars and so on and so forth. Because if you have this type of system, you reduce your economic system. And so the general idea is that you can work locally, but you would have to be satisfied with a much lower welfare level. I'm not saying that that is impossible. It's probably very well possible. I cannot imagine the people in the 1960s here in Belgium that they were all unhappy. We are about 3 times more rich than they were, but they were not unhappy. So it is possible to live, but be aware that this is the choice you have to make. And if you want to make that choice, well, be aware that you will not be able to do city trips every 2 weeks. Forget it. Yeah. So these things will be gone.
So it's a positive change.
It's a positive change, absolutely. In that respect, it's definitely a positive change. Yeah.
City trips, okay.
The question in front.
Well, I used to work in banking, and actually my favorite game was the Russian roulette. And the Russian roulette is when you are about to shoot your head, but I knew that I was shooting with plastic balls, plastic bullets. And of course, I fear that the next crisis is again going to come with excessive risk-taking by the banks. And when you shoot with a plastic bullet, you don't have the risk. I think that to switch from ethics, from greed to ethics, you have to make greed life-threatening. And so if you have real bullets, in other words, if you separate banks, investment banks from deposit banks, it's life-threatening and bonus-threatening, and then you can stop the speculation and save society.
I think so. Robert is a member of Finance Watch. I think you just advocated, we remember this, that bankers play Russian roulette with real bullets. I think that's your recommendation. It's pretty strong.
There was a last question in the back. Yeah.
Thank you. So I think the world is now facing 2 big problems, amongst others. The first one is the environmental crisis. So our economies is still relying on fossil fuels. And the second one, and we never hear about these topics in the discussion of today, is the social problem. Social inequalities have never been so high as in 2018. People have a lot of money, a lot of capital, a lot of things. Other people have nothing. And I think if a bank or if another enterprise wants really to be ethical, they have to play on these 2 levels. They have to play on the environmental level, but they also have to play on the social issue. And when we hear about ethical banking, we often hear about green banking. We invest into green funds. We invest into socially responsible investment. But we never hear about like the social issue. Decisions of mainstream banks are still taken by white men at the top. These white men have super high salaries, creating inegalities. Shareholders who invest into the bank will get super high dividends, creating inequalities. So what can we do within mainstream banks to change this? Not only playing onto the green thing, like investing into good green economies, but also play on this other core issue, which is diminishing, crucially, the distance between the rich and the poor.
Anyone on these governance issues?
Yeah, definitely you have to take the social issues on board, but do not think that this does not happen. So one of the things that I developed within ATBL is methodology, and how do you measure a sustainable company from a non-sustainable? We have several components. We look at human rights, we look at social issues, we look at inequality issues, we look at environmental issues, we look at 6 domains. We have 150 indicators. We are not alone. The Sustainalytics and the Visuals of this world, they all have developed this type of methodology. So do not think that this does not happen. Of course, people have preferences. Some people look more at environment, some look more at the social issues, so there can be differences. But in general, the market, if it's well done, they look at all sides. They really look at all sides now.
Maybe we will conclude here. If everybody wants to be a bit in Twitter mode and have a 30-second conclusion, who wants to start between our panelists? Okay.
Yes, I want to finish on Matthias' question. I think it goes very far, because what Matthias is talking about is a transformation, a change of society. And it's a question we have to choose. Do you want a bank which changes, transform society? It would be nice.
Yeah, so I think you said climate and inequality, and that these indicators are extremely clear that we're in a very dangerous zone right now. I think if you look at these indicators over the last 30 years, so globalization, I think there's been a massive increase. So when you say be careful what you lose, I think it's also about what you gain. Huh? I think so. But to finish on a more provocative note, I think if we undo financialization, because I think it was mainly a globalization of finance, or at least finance driven, I think then we stop. Of course, I'm extremely supportive of, as I said, right. But I think we should stop relying on banks and the financial system to change society. So the best immediate way to avoid climate change is a very strong carbon tax, a global carbon tax. But you can start it in any country. I mean, first of all, this will immediately move trillions of money from the private banking sector, because all of a sudden the projects that are brown will become economically unviable. So it will transform the whole economy. So that's economic regulation, not financial regulation. It's much more powerful. So we need a carbon tax, and that's the same thing with inequality. I mean, I think it's schizophrenic to ask the financial sector to reduce inequality. It is about tax, and corporate tax have gone like this for the last 30 years, and the marginal tax rate, so the tax rate on the highest incomes, and of course on capital, have gone like this as well. To undo this, it's very simple. You just need to put them in the other direction. It has nothing to do with finance.
1 10 seconds and 1 20 seconds. The 10 seconds, yes, of course, dialogue with and talk to murderers and sexual harassers and speed riders and free riders, and at the same time make regulations that they can't proceed as they did. And the 20 seconds, now I understood that it's about efficiency, the scale debate. And I think it's a brilliant example for the difference between economics and chrematistics, because what economists or chrematists, disguised as economists, deem as efficient is highly inefficient in building trust, in building cohesive societies, in building equality, in strengthening democracy, in stabilizing the global climate, in conserving cultural diversity, and maintaining everything that makes human lives valuable. Whereas true economists would pose the question differently and ask how efficiently can we use economic resources, amongst them capital, investments, allocation of capital, in order to increase trust, in order to increase cohesion, in order to stabilize the climate, in order to improve the environment, to strengthen democracy, to become more conscious about human dignity and gender relations, just for instance. That's also efficient, but maybe not in the classical grammatistic terms, but in the new economic terms.
Well, very briefly, I'm an economist, I'm a philosopher also, so I know about Aristotle, who was, by the way, not a Democrat, but I agree with the difference between economia, the oikos nomos, and the grammastica. So that's indeed a problem that we are faced with. Now, the thing is, it's part of a transition, transition towards a sustainable economy. That's what we need to do. Do not think that economists are all the Fama and the Friedman guys. Also, Schiller was given a Nobel Prize, so, and he has a completely different view of financial markets. So there's difference out there. And so when it comes to the central questions here, I would only repeat what I said before. Of course, Lieve is right that she points out, look, they will integrate it and it can be very shallow. And it is very shallow with some banks, what they do with some of the large banks. They say they change, but do they really change? Well, you need the alternatives. You need indeed the role models of ethical banks, and you need to push. Also as a customer, you have to ask the question. You know, if I have this money and I invest it somewhere, so you say this product, that's good for you, but what does it do? What does it do? Yeah? Is it a bicycle with brakes or without brakes? Yeah, you want to know. If you don't ask the question, who will ask the question? I mean, the pressure has to come from both sides, but you cannot neglect the existing system in the sense that you can say, well, we'll build it from underneath. It will take far too long. If you do not change the existing system along with that, we will be too late, to put it as simple as that.
Thank you. So what I've really marked me tonight are the different speakers, the different questions, the energy in the room. For me, what the professor said about raising ethic issues at university, I think this is really something that needs to be worked on. It would be great that we have a new generation of students that have different ways of thinking. What Benoît said, regulation, yes, but led by citizens, NGOs, members, I also think this is true. I think there is momentum. I think it's now that we have to act. What Tom said about values, very important. It's the DNA of bankings, ethical bankings, and it's that way that we have safeguards, that there's no mission drift. And what Christian said, among other things, is all about this new paradigm. How can we reach this new paradigm? Everybody working on it. And I hope that we go in. I'm a positive person, maybe an idealist, but I also think that we can go for it now, that the momentum is now. Thank you.